Many apartment investors have New York right at the top of their list for capital deployment, and we're going to take a look at some of the current fundamentals from the New York apartment market, providing some stats on what gets everybody so excited about the Big Apple. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, and I'm joined with Greg Willet, the VP for Research and Analysis at MPF Research. And Greg, you just got back from meeting with some clients based in New York. What's the mood among the clients up there?
When they talk about New York specifically, everybody's pretty confident that this one remains completely full, even with new construction kicking up a little bit from the almost nothing that it had been. So the key question is, can rent growth be sustained at the really strong levels that we're seeing now? And then just how much variation are you going to get from one submarket to another on those rent numbers?
And let's jump in and look at some numbers here. We're going to show you a graphic showing rent growth, year-over-year rent growth by quarter. And as the graphic shows you, same-store rental rates for new leases jumped 7.1% in 2011. That is the sixth best performance nationally, putting New York behind only the three Bay Area metros, as well as Boston and Austin. And let's take a step back and look at the bigger picture for pricing patterns in New York over the past couple of years. And you can see that annual rent growth got all the way up to 9.6% in late 2010, and then slowed down a little bit. Rents were still rising considerably through early 2011, but we did start to see a little bit of slowdown in the pace of rent growth at that point. That's something we saw in a lot of places all across the country, a slowdown in growth once apartment owners had recouped the losses from the downturn in 08 and 09. But since 1Q 2011, New York has seen its pace of rent growth accelerate up again. That's a good sign, and it's not something that we've necessarily seen in some other markets that were on that top performance list in 2010.
And Jay, let me follow up on those metro numbers and break it down a little bit on some of the key individual neighborhoods across metro New York. And hitting on some of those key spots, you see that the top tier submarkets in Metro New York are seeing rent growth really in the 8 to 10% annual range. Right there at the top, we've got Bergen County, New Jersey, and then also in that top tier, both Brooklyn and Manhattan. That's a pretty big premium if you compare it to yearly rent increases that are around 5% over in Hudson County, New Jersey, and about 3% in Westchester County, the White Plains area.
So Greg, let's address the question that's on everybody's mind who's looking at deals right now, and that is sustainability. Can New York sustain this level of rent growth going forward?
Well, in 2012, we do think that answer is certainly yes. We've certainly got another 12, 18 months where the numbers are going to look really, really strong. Going longer term, there aren't any real red flags into what's going to happen, but it's tough to sustain that really high rent growth year over year over year in any market, including New York. So we do think that the number comes down a little bit closer to what the general consumer inflation rate is, and that's not just a pattern for New York alone. We do think that happens almost everywhere. And then going down to some neighborhood level trends, we do think that the strongest rent growth will be in the heart of the city. So that means that one to watch right now is that Bergen County, New Jersey area, which is in the top tier at this point. Probably should come down a little bit, and a key question there will be just how much new construction does emerge in that neighborhood.
So while the focus is obviously on rent potential, we'd be remiss not to show you some occupancy stats as well. Overall occupancy in the New York metro area is at 97.4%, up 40 basis points year over year. We're not seeing a whole lot of variation by submarket or by product niche, and certainly aren't expecting to see many variations going forward. And Greg, you're actually going back to New York in a couple of weeks, right?
I am. I'm going to be a speaker at a conference there, which has a complicated name, so I'm going to read that to you. It is the Northern Metro Multifamily and Mixed-Use Commercial Real Estate Summit, which will be on April 4th.
That sounds like a very thorough name. So if you're in the area, look for Greg in April. And if not, please join us again next time for Apartment Market Dynamics. Until then, for Greg Willet and for MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.